better back up. We don't have enough road to get up to 88.
Roads? Where we're going, we don't need roads.
What the hell is going on here?
Right, hello and welcome to Camel Finance. I'm your boy Camel and I slept in really late this morning, so we are behind schedule, but we're going to get through it. First of all, welcome to this week, this short week. Today I want to talk about the 4 possible paths I see for Bitcoin, and I want to discuss how likely I think each one is. Then I've got a few charts to show you which are incredibly bullish for Bitcoin, and then we're going to quickly touch on a few charts as I explain to you what I am looking out for this week as a trader. So in the meantime, let's get into this. So scenario number 1 is that the top has already come in for Bitcoin and we've hit this retracement level. We arguably are either going to be marking this as the top, or perhaps we have got one final sort of push up into the 702, something like this, and then all of this is to play out as BCB is suggesting here. There's another look here from BCB as he asks, which one do you think is most likely? He's looking for a distribution pattern to come in, either something that mirrors A, something like this, and then a rollover, or indeed something like this with only 2 drives instead of 3, that ultimately culminates in marking the top for Bitcoin. So this is one possible scenario. Do I think it's personally very likely? No, I don't. And there are over $1 billion of liquidations for shorts that have piled in, and they are due to be liquidated between 52.4 and 53,000. Do I think this is personally very likely? No. But is this one possible outcome? Yes, it is. This is the objective reality. This is one possible outcome. I do think BCB is slightly trolling with this tweet because he hasn't provided a third possible outcome, which is that we were to break out above the 702 and continue higher. And I have heard him say that he's happy to see that and that his altcoin bags would do better if that's the case. So I think this is somewhat of a trolling tweet because of course he should have included a scenario C whereby we continue higher. But undeniably, I would be completely wrong if I said that this isn't possible. Okay, this is certainly possible with the top already coming in and the ETF marking the top. In hindsight, if this is the case, then it'll be really obvious. We'll be able to look back and say, well, the ETF has always marked the tops, right? And the bottoms. This was the short ETF back here. Same is true in 2017. The ETF, the futures ETF for Bitcoin marks the absolute top. So this time it would just be the spot Bitcoin ETF marks the top here. Like I said, in hindsight, this would be really, really obvious. So it's certainly one possible outcome. However, it's the one I think is the least likely personally. So that's scenario 1 done. Early top and no new all-time high. Bitcoin rolls over and goes on to make new lows. Scenario 2 for Bitcoin is that we continue to do what we have always done. Now, before I go over this, I should probably just quickly clarify what this chart shows, okay? The blue dotted vertical lines denote the halvings and the next expected halving date for Bitcoin. The yellow vertical lines denote the midpoint, or said another way, the halfway point between 4-year cycle lows for Bitcoin. The 4-year cycle lows are denoted by these green arrows, okay? So they show you the ultimate bear market lows, and they occur very consistently just under 4 years apart. The green boxes denote the time taken in a bull market from those 4-year bear market lows. And the red boxes denote the amount of time spent in a bear market after the major top comes in. And of course, that bear market period typically ends at the formation of a 4-year cycle low, again, denoted by these green arrows. As you can see, Bitcoin is actually very, very, very consistent in terms of its 4-year cycle. If instead of using tops and measuring the time between tops, or instead of using the halvings, if we use the 4-year cycle lows, you can see that this is remarkably consistent. Okay, first of all, 37 bars. Okay, this is 37 months of uptrend for the first cycle. The second cycle, 35 months of uptrend from bear market low to bull market top. You can see in the next cycle, exactly 35 bars between the 4-year cycle low and the prior all-time high for Bitcoin. And you can see that the bear markets were 13 months, 12 months, and 12 months respectively. So pretty consistent if you ask me. With all of that as context, this leads me nicely into scenario 2. Scenario 2 is that we're going to be able to look left and project it out forward to the right-hand side. meaning we should expect to see a top come in for Bitcoin sometime around the 35-month mark forward from November, which of course would give us an approximate date of October of 2025, followed by a 12-month bear market decline into that 4-year cycle low before resumption of whatever comes thereafter. So there you have it. Scenario 1, the top is already in, we're on our way to new lows. Scenario 2, we're going to do exactly what we've always done before, which means we're going to top somewhere around October of 2025 and then enter a 12-month bear market as we find that 4-year cycle low. It is of note, if you are unfamiliar with cycle theory, that this scenario here, where we repeat what we've always done, would technically be qualified as a right translated cycle. Right translated just means that the top has formed after the midpoint of the cycle, which of course, as I said earlier, is denoted by the yellow vertical lines. That's why I've put the yellow vertical lines in here. So a top anytime after the midpoint, after the halfway point, considered right translated as the peak has formed on the right hand side of the halfway point, and conversely, any peak that is to form to the left-hand side of the midpoint would be qualified as left translated. Which brings us nicely onto scenario number 3, a left translated cycle top. What this would look like is that the top comes in for Bitcoin sometime before the halfway point, sometime before the midpoint of the cycle, which of course is November of 2024, assuming my count is correct. And as is typical with a left translated cycle top, because the top has come in early, then we would expect to see a longer and more drawn out period into that 4-year cycle low. So thus I would need to adjust my bull market and bear market counts, and it would look potentially something like this, where for the first time we see a shorter bull market, a shorter duration. As you can see, this would be about 24 months of bull market versus the 35 we are used to. And our bear market subsequently, because the 4-year cycle lows are still 4 years apart, would therefore have to be extended, and perhaps we would expect to see somewhere in the neighborhood of 23 months of bear market as opposed to the 12 that we are used to seeing. For those that are familiar with my work, you will know this has been my base case expectation since about 2018. The main reason for that is what we typically see from a larger super cycle is 3 right translated cycles followed by a left translated cycle, which would complete a much larger cycle. All this is a fractalization of what we see play out on the smaller scales. This schematic here I drew and is from my How to Trade Cycles video, which you'll find in the Trading Tutorials playlist. The reason I point this out is because this illustrates a textbook weekly cycle, which is comprised of 1, 2, 3 right translated daily cycles, meaning the peaks form to the right hand side of the midpoint here, here, and here, followed by a left translated cycle that culminates in an extended declining portion of the cycle before we find that next larger cycle and continue to the upside. So this fractalization of chaining together 3 right translated cycles followed by a left translated cycle to give a larger cycle, whether this is chaining daily cycles together to form a weekly cycle, or whether this is chaining weekly cycles together to form a larger yearly cycle, or indeed whether in Bitcoin's case, as my hypothesis suggests, that we are chaining together multiple yearly cycles, multiple 4 yearly cycles, right? Right translated, right translated, right translated, left translated, extended bear market decline to give us one larger 16-year commodity super cycle. This is not dissimilar from what we see in the gold market. Gold has much shorter daily cycles and therefore much shorter weekly cycles, and ultimately undergoes a much larger 8-year commodity cycle versus Bitcoin's daily cycles, which are significantly longer, and thus I believe is potentially leading us into a much larger 16-year cycle for Bitcoin. So again, if it was to do this, if it was to left translate, this would be nothing out of the ordinary. This would just be a larger fractalization of what we observe all the time in cycles on the smaller time frames, as I showed you with that schematic. So from the top, scenario 1, the top is already in, the ETF marked the top, and we're on our way to new lows. Scenario 2, going to continue to do what we've always done, and we've got a total of 35 months of upside in the Bitcoin price before entering a 12-month bear market, as we always have done, into that 4-year cycle low for Bitcoin, where potentially we'll be looking to do this whole thing all over again. Scenario 3 is the top is likely to come in early, that is to say before the halfway point of this current 4-year cycle. Said in a more clear way, that is to say a top is coming in left translated before November of this year, and thus the remainder of the cycle will be spent in a decline into that next 4-year cycle low, as shown by my yellow squiggle. And last but not least, scenario number 4. Scenario 4 will by far and away be the most difficult to deal with, because scenario 4, we have this double pump into ultimately a right translated cycle top. But initially, it's going to look like a left translated cycle top, as you can see. Initially, we're going to have what looks to be a top before the midpoint of the 4-year cycle, right? That will be right here where my cursor is. A significant pullback. And during this significant pullback, it is not going to be possible to know whether we have just entered a extended bear market decline and that we should expect at least a couple of years of bear market decline into that next 4-year cycle low, which of course would be the typical left translated cycle that I just showed you in scenario 3, or whether indeed we are about to have a secondary pump to form a right translated cycle top that then presents in a 12-month bear market decline. That of course would look something like this, except this peak will of course be more shifted towards this side right here, followed by a decline for about 12 months into that 4-year cycle low. The reason I say this one is going to be the hardest to deal with is because in this neighborhood, it's going to be only reasonable to expect a left translated cycle top has come in, like I said, in line with that fractalization that we see play out for cycle theory. However, we will have to respect some kind of trendline breakout because there will be no way of knowing whether a secondary higher pump is going to come to ultimately form a right translated cycle top, or whether buying this breakout right here will ultimately lead to a failure, a stop out, and a decline into a 4-year cycle low, confirming that the original idea of a left translated cycle top was correct all the time, and in fact all we did was standard left translated cycle stuff. So those are the 4 scenarios that I believe we have. Again, from the top. Scenario 1, that the ETF has marked the top and we're about to make a journey down towards new lows. We will not see an all-time high for Bitcoin, and we will look back on this moment in time and say, well, the ETF marked the top, so did the 702 retracement that is on brand for BCB, and off we go to new lows, possibly with the death of many altcoins and even Bitcoin. Scenario 2, like I said, is that we just do what we always have done, which means the top is not due until about October of 2025, and then we should enter a 12-month bear market decline into that 4-year cycle low, just like we always done in the past. That would be nice and easy because not only could we use typical indicators, metrics, and techniques to get us out at the top, we will also have that confluence with knowing that if we run up for 35 bars or thereabouts, it should be about time to start to expect that 12-month decline into that 4-year cycle low. Scenario 3, as I've been talking about over and over and over again ever since I've had this channel, has been my base case expectation because of that fractalization that we see occur all throughout cycle theory, and that is that we get a left translated cycle top. I think this would catch a lot of people out because most people don't really know about this. And all it really means is that we will front run everything, forming an early top sometime before November of this year, and then spend the remainder of the 4-year cycle in a bear market decline until we find that 4-year cycle low around November of 2026. And scenario 4, whereby we fake out a left translated cycle, have a huge decline, a massive painful shakeout, be forced to buy a trend line, buy back in, not knowing whether or not that is going to roll over, fail, and head down into that 4-year cycle low, or whether indeed that breakout will confirm and continue to ultimately end up forming a right translated cycle, whereby we could say at the end of it all, nothing was ever different, and all we really did was ultimately put in a 35 bar top, followed by a 12-month bear market decline. But the good news is, you know, we've got our 4 scenarios. One by one, we should be able to start scratching these off, and what is left should be the truth. What is left should be the one that we end up trading, the one that we end up reacting to. And as ever, so long as we continue to take things one day at a time, we should be able to continue to stay on the right side of the trades. So before we move on, write down in the comments, let me know what you think is the most likely outcome. As I continue to look at Bitcoin charts, I only really see bullishness around me. We are currently at the same price we were back in 2021, but we've since had triple the hash rate. So that to me is bullish. Also, plan B gets an awful lot of criticism, as you know, not from me. I think we are getting dangerously close to the party zone. The party zone, of course, being north of 100k. Some of the reason I think that we are going to achieve these larger numbers above $100,000 for Bitcoin is under the hood. There is enormous institutional demand for Bitcoin, okay? We're seeing things like this all the time. Japan goes big on Bitcoin as the Japanese cabinet approves crypto assets for investment by venture capital firms. We also saw Fidelity set the tone with their flagship conservative ETF, whereby they allocated a 1% of the fund to their Advantage Bitcoin Spot ETF. So slowly but surely, this is setting the tone for the 60-40 portfolio, 60% stocks, 40% bonds, to slowly become the 60-39-1. 60% stocks, 39% bonds, 1% Bitcoin. If indeed this is the case, and if this is what we see play out over the coming weeks, months, and years, then believe me, nobody is bullish enough. Fitting in with this theme of institutional allocation to Bitcoin, the Buy Tree Bold Index just increased its allocation to Bitcoin to 25% from 18%. Pensions, insurance companies, family offices, etc. are all going to start to allocate just 1% into Bitcoin ETFs. But as time goes by, it's most probably going to be increased to 5 to 10%. Elsewhere, we have even more bullishness, as in yellow here is the exchange balance percentage on Coinbase. And as you can see, Bitcoin is being drained from Coinbase like a lonely old man on holiday in Thailand. And a lot of the reason for this huge demand for Bitcoin comes from the fact that Bitcoin solves the following problem.
Crypto bros make money literally by making money, and they've made over $1 trillion out of thin air. They'll accuse the U.S. government of making money out of thin air. Maybe we do, but we're the U.S. government.
And so with the ETF, with the validation of Bitcoin as a real world asset class that is here to stay, and with more and more people starting to wake up to the fact that a select few get to print money indefinitely and everyone else has to pay the price via inflation, demand for Bitcoin, which has a hard capped supply, is only going to increase. And I don't know if many people know this, right? But Bitcoin, this is Bitcoin against M1, okay, the money supply. It has yet to make a new all-time high since the 2017 bull run. And that is likely going to change this time around. We are about to see significantly higher numbers, in my humble opinion. And for those of you that think it's still too late to get into Bitcoin, take a look at this, okay? This bull run has barely even started yet. If we can make it even halfway up here, then very, very nice things will happen to the price of Bitcoin walking forward. So, of course, the stock market was closed yesterday for President's Day, and thus not a great deal has changed since my weekend's TA and deep dive. But the DXY starting to look a little bit more like potentially it has one final leg down into that 3-year cycle low. I still maintain that I want to see the mid-90s hit as my target, which has been the target, of course, the OGs will know, since we called the top back here. Bitcoin continues to do Bitcoin things, doesn't it? We continue to push up 2 positions there and all the crypto-related equities. So we'll see, right? We will see. Still looking for that short if we can play out this yellow squiggle in oil. So can we, can't we? That's to be determined. And gold getting that counter trend bounce before what should be a left translated daily cycle that rolls over into that weekly cycle, as my yellow line suggests. So looking for shorts for gold. I want to give this a little bit more space first. And of course, the big focal point in the stock market is it going to be time to take some profit this week? I suspect it probably is. Okay, we've got these 2 positions I've been saying consistently over and over again. Lose the upward sloping red support line. Then it'll be time to get back to neutral again and wait for some daily and weekly cycle lows to show up. Same is true of the NASDAQ, right? Above the red, we'll keep pushing it, but below there, I want to be taking my profit. And the same is true of the Dow. So those are my focal points for this week. Hold above those red upward sloping supports, and I'll keep pushing the longs. But if we start to lose these upward sloping supports on a daily closing basis, it will be time for me to lock in some profit and sit on the sides, waiting to attack out of those next daily and weekly cycle lows. So I hope you enjoyed today's episode. Let me know which one of those 4 scenarios you're currently championing as your base case. And until next time, take care from me. All the best. Cheers. Bye.